Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Monday, the 25th of September 2023. We'll be breaking down chart and through the exact zones where price will close above potential buys or close below for potential sells as well. So looking at the previous weekly candle, the weekly closed bearish around 181.550, breaking out of this weekly range and tapping into the weekly support formed on the 6th of August 2023. But when looking on a monthly time frame, the monthly candle is rejecting the upside and breaking below this recent monthly support formed in August 2023. So what's interesting here is this monthly candle. Obviously, the monthly candle is coming to an end. We only have one weekly candle before this monthly candle closes. So when you look on weekly, the first thing you can see is this weekly candle breaking out of this range. So potentially, price is actually rejecting the upside. So there is a probability for this monthly candle to close bearish, forming a new monthly resistance around 184,400 and breaking below this monthly support, weak monthly support formed in August 2023. So now the anticipation is to see the new monthly candle to form a top wick, to retrace, maybe retest this previous monthly support before breaking this low and continuing bearish. Now what's interesting when we put a line to where this previous monthly low is, we have a weekly support. So maybe price is retracing to allow for the following weekly candle to form, let's say, some sort of like a weekly support, and for price to retrace and then to allow the new monthly candle to retrace before breaking this low to continue bearish when we have a rejection to the upside. And now to break down the chart and looking at the daily for Friday. So the daily candle closed weak bullish, forming I'd say weak daily support around 181,500, but overall probably price have been ranging within the low time frame. So now to break down the chart, drop it down to the 4 hour time frame, and we can clearly identify there is small body candles within the 4 hour time frame. And usually when you see these small body candles, that means price have been consolidating on the lower time frame. So the first thing we can do here is we're going to put a line to where this 4 hour support formed around 181,280. The most recent 4 hour resistance formed around 181,860 with a rejection to the upside. Drop it down to the hourly, and now we can see we have the same level of support and resistance. Zooming in and drop it down to the 5-minute time frame, we have the same level of support. Actually, we can adjust the level of support slightly to 181,270. The level of resistance slightly to 181,870 as well. And there's no need to look at the 15-minute time frame, not really too worried about this 15-minute resistance. I would say now to identify the no trade zone. I'd say what we could do for potential buys is to wait for price to break and close above this 1 hour resistance above 181,870, and for potential sells, I'd say below 181,270, below this hourly support. And that means this is going to be a no trade zone based on the hourly, and that looks good as well on the 4 hour time frame. As we can see, the 4 hour body candles have been trading within this no trade zone. And we're just going to put a rectangle to where this no trade zone is, just to identify it. And going back to the daily, so the first thing we're going to look is for potential buy. So the first thing we can see here is we have a daily rejection formed on Friday around 182,300. Drop it down to the 4 hour time frame, we have a 4 hour rejection, but we're looking on the hourly time frame, we have an hourly resistance formed around 182,200. Drop it down to the 5-minute time frame and the 15-minute time frame as well, we have a 50-minute resistance as well. So I'd say the first target for buys could potentially be 182,200, targeting this hourly resistance. The second target for buys, so since we've had this Thursday daily candle breaking below this range, maybe we could see price potentially to pull back to retest this previous broken daily support. We're going to put a line to where this previous daily support is, and what we're going to see is when we drop down to the 4 hour, if we can identify any previous 4 hour support, for example. So in this case, what we can see, this is 59.60 pip range. So before this 4 hour previous support, we have a previous 4 hour support formed around 182,600. Looking at the hourly time frame, we have clean traffic on the left, and in those cases I think it's better to stick to the high time frame. So I'd say the second target for buys could potentially be 182,600, targeting the 4 hour support formed on the 14th of September 2023. And now to look for potential sells and going back to the daily. So since the daily candle on Friday closed weak bullish with a rejection to the upside, that means there is no volume for price to continue bullish. That means price is rejecting the upside. So the other direction we have here is we have sells. What we're going to do is we're going to work it based on the weekly, dropping it down all the way down to, let's say, the 5-minute time frame and the 15-minute time frame. So the first thing we can see is we have this previous weekly low that was formed around 187.20, dropping down to the daily time frame. Now what we can see on the dailies, we have this previous daily support formed around 185.70, which that matches also with the weekly support and the 4-hour support, as we can see. I would say the first target for sells could potentially be 185.70, targeting this daily, which is also the weekly support. The second target for sells, now what's interesting here is below this weekly support, we have a rejection candle to the downside. When dropping down to the daily, within that rejection, we've had a fake out on a daily time frame. So what's interesting with these two daily candles is we've had one daily candle closing strong bearish, breaking out of this range. The following daily candle retraced all the way and corrected the whole move. Now, since we have those levels, and then when it dropped down to low time frame, we haven't really got any, let's say, this is a big range. For example, this is 192 pip range. When it dropped down to the hourly, probably we can't identify anything. Again, this is a big range. In those cases, what I like to do is to ignore this fake out and to refer to the previous support. For example, in this case, we have this previous daily support formed around 179.900, and probably we're gonna have those targets based on this previous daily and the 4-hour support. So I'd say the second target for sells could potentially be the daily support formed on the 21st of July 2023 around 179.900.
Dominion Markets, your trading sanctuary.